When we first originally set out to launch ZenBTC, we had this core thesis that Bitcoin is the asset and Solana is the infrastructure. And that led us to launch ZenBTC. We got the coalition of willing in the Solana ecosystem to really support between not only Solana, but also all the tier 1 DeFi protocols. The next really stage of after the liquidity pools is setting up all the lending markets. And that's what we did as well. We're a blue chip asset on Project Zero. We're about to approach $1 million in deposits and around 300K of borrows. And we're also live and have markets on Loopscale as well, which is another lending market on Solana. Now, the next stage is really unlocking yield markets for ZenBTC. Remember, at its core, ZenBTC is a decentralized, yield-bearing, and Solana-first wrapped Bitcoin product.
ZenBTC V2, the way that it works is that every single day, we do a Bitcoin yield transaction that is 100% verifiable on the Bitcoin blockchain. Right? That transaction is more sats to the underlying ZenBTC. Oh, I'm actually earning sats. Every day I'm earning sats. I'm not earning points. I'm not earning some governance token that I don't even know what it is. I'm earning sats.
You are just earning native fees via yield from Zenrock's custody engine. We have plans for expanding our growth and our profile of assets that we custody in 2026.
We, as Zenrock, appreciate the fact that there are going to be many opportunities to have very profitable off-chain deals. And so we could just cover our ears and say we're not going to take them, and we would grow way slower. Or we can say, okay, these deals are actually very good. How can we do them in a way that benefits the token holder, benefits the entire ecosystem as a whole, right? And so what we've decided to do is say, welcome everyone to ZR Talks number 11. This is another fireside chat with just me and Adi, and today we're talking about another big update we're really excited to share, which is ZenBTC V2 rollout. But kind of before we dive into all of that, Adi, maybe it'd be good to just kind of set the stage, talk a little bit about the progress of Zenrock over the last couple of weeks, and some of our big updates.
Yeah, maybe even we back it up a couple months. I mean, when we first originally set out to launch ZenBTC, we had this core thesis that Bitcoin is the asset and Solana is the infrastructure. And that led us to launch ZenBTC in August of 2025 this year. Since then, we've pretty much set out on the first phase 1 of building ZenBTC. And what that means is that we got the coalition of willing in the Solana ecosystem to really support between not only Solana, but also all the tier 1 DeFi protocols. We set out and set up the initial liquidity pools between Orca, Meteora, and Radium. And on top of that, we had a Camino ALM automated liquidity management incentive program and campaign flow for about 12 weeks, 3 months. And that's where we distributed Rock rewards to anybody that would deposit into our 3 main pools, which was ZenBTC CBBTC, our core flagship pool, ZenBTC USDG, ZenBTC Jito Sol. Since then, ZenBTC has processed about 40 million in total volume. It has about 8 million or so in TVL. It's a bit volatile as people trade in and out of it, but we've really set up to establish that core foundation of liquidity for the asset. Remember, Bitcoin is the asset, Solana is the infrastructure, but we're now deeply embedded into all of the Solana DeFi protocols. The next really stage of after the liquidity pools is setting up all the lending markets, and that's what we did as well. We're a blue chip asset on Project Zero. We're about to approach $1 million in deposits and around 300K of borrows. And we're also live and have markets on Loopscale as well, which is another lending market on Solana, credit market on Solana. We also did that for ZenZek as well. But that was kind of the next stage of building out a core asset in blue chip asset in Solana DeFi. Now, what I think is the next stage is really unlocking yield markets for ZenBTC.
Yeah.
Remember, at its core, ZenBTC is a decentralized, yield-bearing, and Solana-first wrapped Bitcoin product. It's decentralized via Zenrock's custody. DMPC is what we really call it, and that's distributed across 8 validators. The private key is. It's a federated, distributed model, and then yield-bearing, which is what we're going to go into now.
Yeah, no, it's great context. I mean, it's pretty incredible kind of these last couple of months, I would say, going from, launching this asset. We don't really know who's going to pick it up, how it's going to go. Is there even going to be depth? Is there even going to be liquidity? Can you even do like a $20,000 trade in the asset, right? And now getting to the point where we have that depth, we have lending markets set up. There's a lot of different things you can do with it. Every single day, it's getting more and more embedded across DeFi, right? And the step that we're at now is V2. And so really what V2 is actually just the completion of the overall vision of what we always intended this product to be, right? Like, it reminds me of the meme that was going around. It's like, first just make it and then make it perfect kind of thing. But we launched this and we knew that there was more that we could put into this product to make it kind of the Bitcoin that Solana DeFi deserves. And I'm really happy to share that I think that V2, ZenBTC V2 is that product. So maybe it'd be helpful to just spend a few minutes
break it down,
quickly breaking it down, talking about what it is. So ZenBTC V2 is a yield-bearing wrapped Bitcoin. A few really important things is that, first of all, as always, all the Bitcoin remains in secure, decentralized DMPC security. Okay. The most important thing when you have a yield-bearing product is where is the yield coming from, right? And this is something that I think as the industry is maturing more and more, people are starting to think about, okay, like, we've seen all these time and time again, these situations where it's 80, 200, 500% APY, and then all of a sudden it collapses, or you end up losing money because, things weren't really what they seemed, right? And like, as the industry matures, we need to start thinking about like, well, okay, this is yield bearing, but like, what is the source of yield? And I think that especially as institutions come on chain, and kind of more sophisticated actors come on chain in mass, and kind of larger pools of capital come on chain with that more sophisticated capital, they're going to be saying and really looking at this like, well, where is the yield actually coming from?
The first question they ask is going to be that.
Exactly. And so for ZenBTC, the yield comes from essentially the core custody technology. So when someone mints ZenBTC, that generates a fee, right? When someone mints or redeems ZenBTC, that generates a fee. Also, we have ZenZEC, ZenZec, right? When someone mints that or redeems that, that generates a fee. We're going to be launching in the next 12 months, 10 to 15 additional assets, right? All of the minting and redeeming of that will generate a fee. A piece of every single thing that we do, every product we build will generate a fee that a piece of that will go to ZenBTC as yield. And that is really the overall architecture. Like, the architecture is to say, okay, we're going to create this really large custody network where we're going to bring tons of non-native assets to Solana, right? Maybe even some assets that are not even crypto assets, which we can talk a little bit more about. But like, the point is, we bring all these non-native assets to Solana. There's going to be custody fees that we're going to be able to charge, right? A piece of all of that custody fee is going to go to ZenBTC as yield. But here's where we've gone kind of one step further. We've realized by looking around the ecosystem that like earning on the custody fee is good. It's like a good start, but it's somewhat limited, right?
Right.
A lot of people, when they decide they want to trade out of ZenBTC, like they're not going to redeem it. They're going to instead just simply like sell it on like Jupiter or whatever, right? So the point is that we are starting to realize that the way forward is to capture these trading fees. We need to capture a piece of the economics from the trading fees, right? So we're now working with some of the proprietary AMMs and other market makers in the space to figure out how can we monetize the trading, and we're really excited to kind of talk more about that over the next coming weeks as that rolls out. But a piece of all of that also comes to ZenBTC as yield. Literally everything that Zenrock does, whether it's an off-chain agreement,
right,
whether it's core custody, whether it's custodying Bitcoin or Zcash or future assets, a piece of everything we do is going to go to ZenBTC as yield, and that's kind of like the flywheel that we're trying to create.
Exactly. And for V2, we're really excited to really put up a transparency dashboard where you can track the yield on a daily basis. You'll have daily fee rebates that go back into ZenBTC, and you'll have auditable kind of on-chain of everything that we do in terms of the yield. And now what that does is that opens up new protocols that ZenBTC could be embedded into, such as Exponent Markets, Exponent Finance, RateX markets that have grown significantly as yield-bearing tokens. Predominantly stable coins have really taken off in Solana DeFi. But ZenBTC will actually be one of the first Bitcoin assets on Exponent, which we're really excited to roll that partnership out. There will be incentives for depositors into Exponent, whether it's the PT or YT token. We're going to figure all of that out and detail it all out. But that being said, it's a blue chip asset right now on lending protocols. You have the foundational liquidity set up, and now phase 3 of the rollout of ZenBTC's DeFi embedded DeFi markets is this yield market. Now, December was really a transparency month for ZenBTC, for Zenrock as a whole, right? What else are we doing on the tokenomics side that you can give some color on?
Yeah, I'm really excited. I mean, I would say, the first of all, like maybe it's really just quickly to just go over kind of how the yield actually flows. So the reason why it's been so difficult to put, like, there's tons of like yield bearing Bitcoins out there, right? So why are none of them on Exponent? Like why is it that like kind of the Bitcoin yield market has remained in this kind of opaque box? And the reason is because, quite frankly, for the vast majority, I think effectively all other products other than ZenBTC, one, the yield is generated through like very complex off-chain situations, right? And this is a big thing at the core. As we think about Bitcoin as premium collateral, and if you want to be able to use a Bitcoin asset composably in Solana DeFi, right? Especially if you're an institution, you can't have it actually be a Bitcoin hedge fund. Like you can't. It's never going to catch on at scale because people are like, the more sophisticated capital is going to look at this and be like, this is just way too risky for our profile, right? The underlying Bitcoin needs to stay in secure custody, right? So the way almost all of these products function is that you mint into a certain product, right? And then effectively they take your Bitcoin off chain, use it in whatever they use it for. Maybe they lend it out, maybe they use it as risk capital, trading strategies, delta neutral, different things. Effectively, most of them are effectively just hedge funds, right? Correct. And then they pass back some of it as yield, but it's completely opaque. There's no real good way of tracking it except for just like whatever kind of the company says was the yield. So like for ZenBTC, the way that it works, ZenBTC V2, is that every single day we do a Bitcoin yield transaction that is 100% verifiable on the Bitcoin blockchain, right? That transaction is more sats to the underlying ZenBTC. So if you think about it, more sats per unit of ZenBTC, and then we have a daily rebasing. Functions exactly the same as Jito Sol. Right. But you can track exactly kind of what generated the fee, and you can track the actual fee payment, and then do the calculation to figure out exactly, why, like how the rebasing works. And because we were doing it in such a transparent on-chain native way, that is what has opened up the ability for us to, enter into these rate markets and really kind of, be this product where it's like, oh, I'm actually earning sats. Every day I'm earning sats. I'm not earning points. I'm not earning some governance token that I don't even know what it is. I'm earning sats, right? And that's the product that we wanted to deliver on since the beginning. It's really exciting to actually be delivering on it.
And you don't need to do anything with your ZenBTC in order to earn the yield, which is the most beautiful part about it. It's really a buy it, mint it, and hold it. And if you wanted to go from, you don't even own Bitcoin, right? You buy Bitcoin on a centralized exchange, you mint it on ZenBTC's mint page, and then you just hold it on your wallet if you don't want to take any underlying risk on it. You are just earning native fees via yield from Zenrock's custody engine. And I think that's a really risk-free way to actually earn yield on your Bitcoin.
Yeah, 100%. I mean, it's like, again, the actual underlying Bitcoin is never, ever used as risk capital in any way, shape, or form.
There's no restaking. It's not deposited into Eigenlayer, AVSs. There's no opaque lending that we do on your Bitcoin. There's no opaque market neutral strategy or trading strategy that we do. It's all fees. And I think that's really where the yield market in entire DeFi should be going towards, right? Real yield is native fees. And I think that's the transition that we're going to see in a lot of these, yield-bearing assets
Well, it kind of necessarily has to be that way.
for the
right?
long term.
For the long term, right? Because, okay, well, actually you can run hedge funds. Like that is the one thing that can work for a long period of time. It's just a certain level of risk. And I think that there's a lot of kind of yield bearing assets that are actually in fact hedge funds. And I think that some of them, will do well. And I think that, in the average person's portfolio, there is room for hedge fund style risk, right? I mean, institutional capital has been allocating to hedge funds forever. So that's not a problem. The problem is that when you kind of say, look, this is just cash, like you're yield bearing stable, oh, this is just cash. And in fact, it's a hedge fund, and then the person is kind of thinking about their risk parameters and like, well, if it's cash, I don't mind putting 25, 30% into it.
Right.
If it's a high risk hedge fund, you're like, well, I'm only going to put, whatever, 3, 4, 5%, whatever you feel comfortable with. And then your mental model is just so different for those two kind of asset classes. So like for us, we want to create a Bitcoin product where you can say, this is just Bitcoin. All I'm doing is holding Bitcoin. And the reason why I am earning yield is because as other people mint and redeem all of these assets on Zenrock, and as Zenrock finds other ways to monetize trading, find other ways to, do other really interesting things with the MPC technology. By the way, our plan is to do, all sorts of interesting things with the MPC technology. And regardless of kind of where that journey takes us over the next year, 2, 3, 5 years, a piece of everything we do will flow back to ZenBTC as yield. And that is kind of the mission statement of ZenBTC and Zenrock in general.
Yeah, absolutely. Let's dive into a little bit of like Rock Tokenomics V2 as well. Let's provide a little bit of transparency. Not much is really changing on that front. It's just more about transparency, right? Which is what I'm always coming back to, is like the real theme of this month.
Yeah, 100%. I mean, I think that not much has changed. One change that we have kind of thought about, and we've been, talking about this with a lot of industry leaders, kicking these ideas around with so many different people in Solana DeFi, is like the burn, right? Because we initially were like, oh, we're going to have a 10% fee burn, right? Where that 10% of all fees immediately we get burned. And in Tokenomics V2, we've decided to scale that back, right? And instead of having a 10% burn, we're just going to use that as kind of additional buybacks. But instead of we're still buying back the token in the exact same way, but instead of burning it, we're actually going to just hold it and use it, right? And one thing we've kind of realized is like, okay, if we can get our token back, instead of just burning it, if we can then go out and, give it out as an incentive, that can grow the pie so much more for the holders than just burning it. I mean, it's the same thing as because burns are effectively just a dividend or a stock buyback.
Correct.
In a sense. And so a company at our size would never do stock buybacks, when they got capital in the door, when they earned revenue. So why would we? And I think that was something that, we kind of look, we're experimenting. We're figuring out what works in real time. And when something isn't working, we're going to say, we can do this better.
Absolutely. I mean, the entire industry is still experimenting on the exact guidelines, the exact framework to really use between, money coming in through the door, protocol revenue, and the token that sits there, right? And I do think your point on overall incentives for broader distributions is still very important, especially for an early stage token like Zenrock, like Rock Token. We want it in more hands. We want broader distribution, and we want people in Solana DeFi to realize that this is a core asset that's bringing, that's directly correlated to net new assets on Solana. And that flywheel effect will not happen in really the short term.
No, it'll take time.
It'll take some time over the course of the next 12 months, really. I think that flywheel in terms of fees actually getting distributed back to ZenBTC holders and also Rock holders will come to fruition, right?
Yeah, 100%. One topic I also wanted to just dive into is off-chain contracts, right? This is something that we've been speaking about with so many other smart people in the space. And, I guess maybe it'd be good to just level set the kind of lay of the land of how this works and kind of the push-pull between labs and these off-chain deals and the core protocol at so many different places.
Yeah, I mean, I think there's a clear distinction in the market right now that you have a token. That token is essentially a product of its own.
Yeah.
And then you have the Labs Co that builds on the protocol. A perfect example of this is actually Aave that happened today.
Yeah.
Right. Aave has its own token. It has the Aave DAO that is a governance forum essentially to provide value back to the protocol and the lending markets. And they have different proposals in terms of assets to list, different mechanics on V4, et cetera. And then you have the Aave token. But what happened was that there's Aave Labs. There's a Labs component there that essentially inked out a deal with a DEX aggregator. And what came out over the course of the last week was that fees did not accrue back to the Aave DAO treasury. It actually accrued back to a multi-sig wallet that is controlled by Labs. And maybe they have plans to distribute back some of those, revenue, some of that revenue back to Aave Treasury, the Treasury DAO, but it's unknown. It's uncertain, right? That is the perfect example of an off-chain contract that was inked out between two different protocols. There's a revenue share between the fees that are accumulated between swaps, and none of the value actually goes back to the DAO Treasury or the Aave token. It's a huge problem. We see that across the entire space. And look, that's okay, right? But I think in terms of the transparency behind it, that wasn't okay. There was a clear misunderstanding of how Aave tokenomics work in this regard, right? There was no like detailed, agreement on Labsco and the token and the DAO on if there is an off-chain contract that's signed and there's revenue that's being produced by that off-chain contract, a portion of it or all of it or none of it will go back to the Aave DAO treasury that is controlled by Aave token holders. That was not clear at all. So that's the point on these off-chain contracts.
That's the point.
If we do get Zenrock, if we do get an off-chain contract, what happens?
Yeah, so I mean, this is 100% like becoming my favorite topic, right? Because the point of the matter is that there are a lot of situations where it is just not feasible to do everything 100% on chain.
No business will get done.
No business will get done, and everyone kind of in the industry knows this. Everyone in the industry is very well aware that there's countless off-chain deals being done just because, and it's not nefarious. What it really is like literally, hey, like we can't build this into the core protocol, this arrangement. Like we need to just sign papers and be like two businesses operating together as businesses, right? So then I actually think off-chain deals are good for the industry and good for the space. The problem is, again, to your point, how they're handled, right? So when we get an off-chain deal, and this Aave example, I mean, it's such a good example, and it's happening everywhere, right? Where it's like, oh no, sorry, just so you understand, those are not protocol fees. Those are like product fees that sit on top of the protocol. It's one thing, right? It's all one thing.
It's all one line
Imagine a traditional company like in outside of the space, and they build a certain piece of their product suite, and they're like, oh, sorry, this doesn't accrue to the equity holders. This is like a different thing. Like people would be like, well, that's literally not like legal, first of all. But I mean,
right.
It's not the way that it should work. Obviously, we all intuitively know that. So we've taken a totally different approach.
Correct.
And our approach is to say that when we as Zenrock appreciate the fact that there are going to be many opportunities to have very profitable off-chain deals. And so we could just like cover our ears and say we're not going to take them, and we would grow way slower. Or we can say, okay, these deals are actually very good. How can we kind of do them in a way that benefits the token holder, benefits the entire ecosystem as a whole, right? And so what we've decided to do is say 100% of off-chain deal revenue will flow top of funnel to our tokenomics as if it had happened on chain, right? And this makes it so much easier to get business done. If we had, again, there's some of these deals that we're currently in discussions with that if we tried to do this on chain, it would be like 6 months of engineering worth just to build like the implementation. Like it would be a total waste, right? Instead, we just push it 100% top of funnel. And that's kind of like the way that we are going to do it. We're going to push 100% of off-chain deals top of funnel as if they had happened on chain. This completely aligns the token holder with the team to be able to kind of get as many of these deals as possible. And why that's so strong is because now as a token holder, instead of you being afraid that we're going to go cut deals that might hurt you, you're like, go cut as many deals as you can, guys. Go make us money, right? And that's the way it really should be.
Net buying pressure from off-chain contracts is what really is embedded in the Rock tokenomics flow. And I think that's very important. The money that comes in that we made from off-chain contract does not sit in another wallet or in another bank account or whatever that token holders don't really see value from, right? So when we do get $100, right, what happens in terms of the flow?
Yeah, for sure. And this is also really important in terms of how we're thinking about Zenrock Labs, right? Because the point is that we hear this all the time. Everyone in the industry hears this. Oh, 100% of the token, 100% of the value goes to the token, right? It's like, okay, so like, is the Labs entity just like doing it out of the goodness of their heart?
Yeah.
Like, so you willing to give me Labs equity for free? You know what I mean? Like, how does this work, right? You have an organization, you have humans, people are getting paid, you're renting office space. Like you can't, like you need to make money, right? And that's something that I think, like from a first principle perspective, we kind of realized very early on. We're like, okay, well, like Labs has to exist and actually be as strong as possible. That's in the best interest of the token holder.
Exactly.
Zenrock Labs being as strong as possible. So here's how it works, right? The way that it works is that when there's always a tokenomics split, and I refer everyone to our light paper V2, which is out, which kind of goes into this in even more detail. But the tokenomics split effectively breaks all fees earned by the protocol into 4 key buckets, right? It's a portion of it goes to the protocol, which pays for, validators and other infrastructure providers, MPC operators, Rock token stakers, all of that sort of stuff, right? So 30% goes to kind of like the protocol, okay? Then 30% goes to like the external builder is what we're calling it, right? The external builder is kind of the entity that created the application. In the early days, that's mostly going to be Labs, because Labs is building most of the applications that are on the Zenrock protocol today. In the future, I expect a situation where that broadens out and there will be external builders that are not Labs, and that would be very healthy for the protocol, right? And then the third bucket is actually Zenrock Labs. And this is totally kind of a novel way of approaching this issue, right? It's to say that, okay, the token holders are most benefited if Zenrock Labs is strong, right? For that reason, we are going to give a portion of the fees earned at the protocol level to Zenrock Labs. And the beautiful thing is that we have made the decision, as we were just talking about, that 100% of off-chain fees are going to go top of funnel to the tokenomics. So whereas most Labs entities, essentially they need to cut these off-chain deals because they need to support themselves. They need to make money to continue to exist as a business, right? So, but for us, instead of that, we push it all top of funnel and then give a piece of everything that happens to Zenrock Labs. And then lastly, 5% is going to ZenBTC. So when we cut one of these off-chain deals, let's say we cut a deal and we make $20,000, right? Boom, 5% of that immediately goes to ZenBTC holders as yield, right? And yeah, I think that this is a totally novel construction. We're really, really proud of it. We've worked really hard thinking about this from first principles, and I think it's kind of going to change the game insofar as Labs is now a totally aligned member of the Zenrock ecosystem. Labs only can succeed by success of the protocol.
Exactly. And also directly aligned with Rock as well, right? Labs becomes a net buyer of Rock after it earns its portion of revenue coming into the overall business, which I also think is very important in terms of alignment, right? Like, okay, Labs uses a certain portion of funds to pay employees, to do its things, but in excess, Rock is the end thing that ends up as the main currency, as the main asset that all of the different segments of the Zenrock ecosystem hold in order to use for transmission, in order to use for incentives, etc., which I think is also that important sort of piece of the puzzle in terms of directly correlating Labs with the actual Rock token.
100%. Because to be clear, let's say there's an off-chain deal and we get paid in USDC, right? Well, the only way to put fees top of funnel into the protocol is with Rock. So we make $100 off-chain fees in USDC. First thing we have to do, buy Rock.
Exactly.
Then that Rock is pushed top of funnel, as I've been saying, to the protocol, a portion of which will go back to Zenrock Labs. And as we generate more and more fees, more and more Rock will go to Zenrock Labs. That Rock can then be used potentially to sell OTC, to continue to fund operations, and whatever else needed. But Labs now has a revenue source 100% aligned with the protocol, not doing anything off chain. Everything runs through the core tokenomics protocol, and I think it's a game changer.
100%. I'd like to take a little bit of a step back. We ran through ZenBTC as a core asset, what it's done in the overall industry since August, right? Ran through ZenBTC V2. December is the transparency month of Zenrock as a whole. Ran through the entire tokenomics flow, top of the funnel down, goes throughout all these different pieces of the Zenrock ecosystem, the Zenrock network. And then now, looking into 2026, we do have plans to launch 10 to 15 different net new assets into Solana.
Yeah.
That could be a mix of things, right? It's not just, going through the CoinGecko, CoinMarketCap, total volume list of assets that historically have traded a lot of volume in centralized exchanges, but have no decentralized exchange exposure whatsoever, or volume whatsoever. That's kind of the first step of it, I think, right? The next step of it is new listings, right? New TGEs, new mainnets that occur should have day one DEX volume liquidity on Solana instantly, pretty much. 100%. And that's a huge angle that we're going to be really a huge cohort that we're going to be very focused on. And the third angle is really this aspect of tokenization, this aspect of real world assets coming into Solana as well, which we have really interesting plans for. I don't want to go into it too much, but I think that 10 to 15 number is definitely a mix of net new assets that are going to come into Solana, whether that be DeFi assets, net new listings, or real world assets and tokenization, which I think we could really play a very interesting part of. I would just say, and kind of to end it, I know we're on time, up on time, but the first innings, we're still in the first innings of Zenrock, right?
Yeah.
We launched ZenBTC, we launched ZenZek, which is wrapped Zcash. Those are the first two assets that we're going to launch, and we have plans for really expanding our growth and our profile of assets that we custody in 2026.
Yeah, 100%. I mean, look, if Solana is going to become the everything exchange, yes, we need to bring every crypto asset, obviously. But there's so many other assets that need to be brought. Zenrock really does sit at this kind of cool kind of, meeting point between DeFi and TradFi. And we're really excited to kind of help be one of the big players bridging that gap. We think that creating the right kind of tokenomic flywheel, product flywheel, the right products is what DeFi is all about. So we're really excited about this launch. We're excited about some of our other upcoming launches that we won't talk too much about now. But yeah, I mean, check out ZenBTC V2, see the daily yield, check out the APY. It's all completely transparent on our site. On our dashboards, and anything else in closing?
No, that's all. Check out and keep updated on our X. We're gonna have a lot of updates coming in, throughout the next couple of months. So really excited about it, and thanks for listening.
Yeah, thanks.